because there's some people that were calling for, recession first half of 24. It's floating, it's all over the place. When you print nearly 5% of GDP, does it mentally push that out?
Do you think 250,000 as a production ramp up is realistic within 18 months?
No, I don't think it's too bullish. And what Tesla's trying to do with that number, so they posted a 125K pilot line capacity. I view that as installed capacity, not actual or realized capacity, obviously. And here's why they did that.
How's it going? I got a familiar face here that I'm sure a lot of you guys have seen. Jeff Lutz from probably Cyberbulls on X. If you follow anything Tesla manufacturing, you probably have seen clips or heard from Jeff and his analysis on Spaces. But anyways, Jeff is a former and current supply chain executive. He runs his own consulting firm, but he had been actually a pretty prominent person in ramping up smartphones to where they are today at a numerous amount of Fortune 100 companies. But Jeff, first and foremost, great and welcome to the channel. I'm really excited to have you on.
Yeah, great to be here, Yashu. Lots to talk about.
Yes. And what better place to start than with stock analysis? And it seems like, of course, we don't need to get too nitty gritty into where, supply lines live or anything like that. But I'd love to get your general thought process on how you look at the stock right now, down about 20% since earnings. It seems like Wall Street didn't appreciate Elon's negative doom and gloom talk about macro. How do you see the stock right now and in the immediate future, let's say?
Yeah, it was interesting, going into the, when the earnings print came out, the stock was actually up 1 or 2%. Going into the earnings call, it was up 1 or 2%. And then, through the call, obviously it was dominated kind of, like, I don't have an issue, obviously, bringing up like what the concerns are and what the risks are. But, it's kind of like, what are the risks? What are the opportunities? It was really, really heavily weighted in one area. And I just think, Tesla's a company with it's got a very strong business. It's got very strong growth. And then it has all these option plays wrapped around it. But in terms of the action, I mean, yeah, you saw it break down after that earnings call. And then the following couple of days, it sells off, usually the 3-day rule with Tesla. And then it kind of stabilized for a bit. There's some technical lines, I think around, 207 was one, and it was testing it today. Obviously 200, there's probably, technically there's probably a lot of strength in that area. But, right now, they've guided for a very strong Q4, record production, record deliveries, guided to hold the 1.8 for the, for the year. In a very tough environment. You've heard other CFOs and CEOs of other companies come out and actually, call out similar risks with different weighting. They mention it on the call, and it, but yeah, for now, I think it's in a nice stable trading range with a lot of supply here. But I mean, you're an expert at kind of understanding that portion. I'd love to hear your take on it as well at 208.
Yeah, I think you nailed it. I think that $200 psychological level is really the level to look at. I mean, it's not great that we're under the 200-day and 300-day at this point. Moving averages doesn't bode great. But I guess and kind of, I think the topic du jour macro wise, at least before we get into Tesla talk, is that GDP growth was crazy high today, coming out at, I think, like high 4s, and expectations was kind of low 4s, if not 4.9. Expectations was 4. So, on the surface, you go, okay, great. GDP growth quarter over quarter is awesome. But of course, if we're talking about lowering rates, I mean, it doesn't bode well for that narrative, right?
Yeah, I think the high, in my mind, so it's a rear view. It's only 3-week old. The quarter ended 3-4 weeks ago. But to me, like, if you're near 5% GDP growth, well, when's the 2 quarters when you're going to be at less than 0 to be in a full blown out recession, which we actually had 2 quarters of negative GDP in mid 2022. So when is that? So does this push out? Because there's some people that were calling for recession first half of 24. It's floating, it's all over the place. When you print nearly 5% of GDP, does it mentally push that out? Also, the personal consumption was really high. Like people are just buying a lot of durable goods. That came out. The jobless claims were kind of in line, maybe a tick higher than normal, which is actually probably received well. So yeah, the big thing like that happened with macro is like what's going on in the bond market, and that I think it was a 5 year. The government just literally flooded like 56 billion of
Yeah.
bonds to the market yesterday, and there weren't enough buyers, and so you saw
Yeah.
the 10 year go up 11 bips in one day, and that's going to wreak havoc on equities.
Yeah, exactly. I think that tail risk that we see on bonds is something that I'm not sure if goes away until we start to see inflation really sub like 3%. And I guess that's probably mid or end of next year. Probably is probably when we get to those year-over-year numbers. But I mean, wrapped around that, and we don't have to get too much into this, is the whole housing concern, and people worried about how does this translate to housing, and what lag effect are we going to see? So the good news with Tesla, though, is that I mean, Tesla has virtually no debt, $26 billion in cash, and every company in the world has to go through what we're facing and the storm that really lies ahead. So, if any company is positioned for it on a balance sheet level and on an executive and on a human capital level, I think Tesla's probably positioned one of the best, if not the best, companies to weather that storm.
Yeah, I agree. And if you kind of put it in contrast to 2021, the balance sheet wasn't there at that point in time. They were just building up the gross margin story. The balance sheet wasn't there at that point. It was on its way, but it wasn't there. And you had this super high multiple. It was trading like at 1,000 times at one point.
Hmm.
And now it's depending on the day, it's in that 55 to 70 range.
Hmm.
And it would still be high relative to, obviously to its auto peers in the market, but even to some of the tech peers in the market. But I don't fundamentally believe, I believe that's a component you have to look at,
Hmm.
but I believe Tesla is that. It's then you have to look at its growth, and then you have to look at those three or four option plays that are wrapped around the company that they're working on. And to me, if one of those hits, it's off to the races. And even anyway, I think you just have to you have to value Tesla a different way. Otherwise, you'll get lost, and you just want to be out of it as soon as you see the multiple going up.
Hmm. So let's talk about earnings. Actually, it's a good segue into earnings. We don't have to get into the nitty gritty of numbers or anything like that. But what was your general sentiment of not Elon's tone, but the earnings that printed? And I guess a segue into that would be Cybertruck and how you think the margin compression that Elon and co were talking about from the ramp of Cybertruck are going to play into what we got going on for the next couple of years.
Yeah. So earnings, I mean, I've been kind of talking about Q3, like this is gonna be a messy quarter. You're gonna have shutdowns, 2 to 3 weeks in multiple different factories. And when a factory shuts down, there's actually a bit of a ramp down. You don't just like go from producing
Hmm.
3,000 vehicles a week, and then you go to zero. You kind of slow it down, and then you bring down the operation, and you're doing all these changes. And then when you bring it up, it doesn't start at where it left off. In
Yeah.
terms of run rate, you have to ramp back up, and sometimes people don't think in that matter. So if it was
Mm.
down for quote unquote 2 or 3 weeks, it's up at 10%, 20% for a couple of days, and then it's going to take a slow gradual climb to get back to its rated speed. And every tick, every week it's below its full utilization. It's actually a cost burden on the company.
Mm.
So Q3 I've always viewed as kind of we're not going to have this beautiful decline in COGS, even though COGS were net lower in that
Hmm.
quarter. It could have been like literally, it was like 500 something. It could have been like another $1,000 per vehicle, if not more.
Hmm.
And just due to the drag of the shutdowns, they won't. Tesla doesn't break that out, but you can also see, you can look at the Model 3 and Y COGS, and as soon as Austin and Berlin were turned on, they literally ramped up like $6,000 per car. It was
Right.
dramatic in
Right.
terms of the influence of those factories. So I don't view the quarter as like, the 66 cents versus seven. Oh, okay, it was messy. the shutdowns. They told you about the shutdowns before the quarter. To me, it's more about, okay, what does Q4 bring? Q4 should be a little bit more pure because you'd have the Model 3 Plus ramped in relative decent speed coming into the quarter. You'll have some called beginning on hand. You'll have supply of that car. You've got inventory from the prior quarter and from that didn't fully turn over. You're going to have that to contend with, and you've got to get production back up, to a much higher rate. So if they get production, raw net production up 10 to 15%, they're
Mm-hmm.
and they don't do any more significant price changes. Remember the price changes they're doing. If you just do the quick math, like
Yeah.
on the one in the US for the Model Y,
Mm-hmm.
$2,000 off two of the trims of Model Y is 20% of the global volume Tesla ships. So
Mm.
when you see something like that, you say 2,000 is times 20% of the volume. It's really a $400. People see the headline number of 2,000 and they're like,
Yeah.
oh my God, they have to take COGS down by 1,600 to deal with that to get to 20%. No,
Uh-huh.
it's you got to net it out. Like what Tesla's gone from these massive price changes in January through April,
Yeah.
where they were literally $4,000 to $6,000, worldwide, and now they're going into more select trims. So I kind of view the earnings as kind of like, all right, messy, but not totally out of line. It's more about where Q4 comes in. If they can raise production 10 to 15%,
Hmm.
I can't see them printing lower gross margins.
Hmm. And how about operating margin? So when we talk about stuff like the Cybertruck ramp, of course, it's not going to be at any sort of meaningful scale yet for us to deep dive into any sort of economics behind it yet. But we heard Elon and Co. and the new CFO talk about the Cybertruck ramp being a dampening of margins and really kind of setting expectations and resetting them for a lot of people to a point where some people are going, well, okay, is Cybertruck really going to be meaningful in terms of production for the next couple of years? And could it go sideways if they hit some sort of a snag? From your perspective as a supply chain person,
Mm-hmm.
do you see that as sandbagging? Do you see that as something where Elon and Co are just trying to reset expectations because they've gotten too bullish, or do you see it as more of a structural thing with the Cybertruck that some people are now coming out of the woodwork and trying to point fingers and say, "Well, look, the Cybertruck was never going to work." Where is your head at when it comes to Cybertruck?
I think they're dealing with a constrained set of engineering issues, yield issues. Yield is, you put so much material in, how much good product do you get out the other end, and at what velocity and speed is the other consideration. And I believe they're working through this confined set of issues. By the way, anytime you do a product that is groundbreaking, that is like never been done before by you, never been done before by anyone else,
Mm-hmm.
in the industry, we call that new, unique, and different or difficult or nud. And when you do something like that, your time to peak volume and your
Mm-hmm.
time to break even financially, they extend out. But what happens is if you've done the right design for manufacturability work up front, when you get to that break even point, you have the opportunity to probably take on all new heights in gross margin because you've got an industry leading product. So you're going to be able to hold, from a pricing perspective, you're going to have a lot of power on that product. And if they hit it out of the ballpark from a design for manufacturability perspective, remember, you can't. It's hard to mix. Like they could have fundamentally done everything right to make the product manufacturable, but they just have this list of problems they got to solve. They have to solve, and they're just not done yet.
Mm-hmm.
So that would be, if I could have a hour just to like go back and forth, you can get a really good feel from what you're dealing with. I don't think it's a fundamentally inefficient product. I don't believe that that's the issue. I believe they're dealing with a confined set of issues. I was not surprised to hear Elon say 12 to 18 months.
Mm-hmm.
He's switched in the last year from being over promise,
Right.
under deliver to more, especially when it comes to hardware and it comes to product. Obviously the FSD is a whole different story, but when it
Mm-hmm.
comes to that, he's been more of under promise on that. So I don't. In terms of COGS on Cybertruck, I'll be interested to see November 30th if they actually deliver to customers or they deliver to
Right.
employees.
Yeah.
If they deliver to employees only, from a finance, this is blue money. Blue money means it's in one pocket out the other from a company perspective, but it would stay in the R&D budget, which wouldn't hit COGS.
Hmm.
But if they start actually, if they make a revenue saleable product, again, this will be how they deal with it with their auditors. I don't know. I don't know for certain. I'm just surmising that if they ship to
Hmm.
customers, then they'll have to move in COGS, but it'll be a very small number of units.
Immediately when you said that, for some reason, my mind went to when Nikola reported that earnings one time, and the only revenue they had was the sale to Trevor Milton's house or something for some sort of power thing that they sold him. Anyway, side note. So, do you think 250,000 as a production ramp up is realistic within 18 months? Is that or is that even too bullish?
No, no, I don't think it's too bullish. And what Tesla's trying to do with that number, so they posted a 125K pilot line capacity. I view that as installed capacity, not actual or realized capacity. Obviously, if they're at 125K, we wouldn't have anything to worry about. So that's installed. That's kind of like where they're at today. And here's why they did that. There's three numbers. There's your pilot line, your install capacity, and then there's your kind of your working view of your peak capacity, and then there's something called your terminal capacity. And so their working view of their peak capacity is
Hmm.
250K. And why not just buy the line? Like Tesla's got $26 billion, buy everything and put it in. The reason is they're trying to take the cost structure down further. They're trying to solve these engineering issues, and they're trying to increase the velocity of the product. And they may have to make capital changes, process changes on the line to do that. So
Hmm.
buy half of it, and then buy the have the next half on order but not executed until you work through and solve some of these problems. That second 125K, they'll want
Hmm.
to do that at lower COGS, higher
Right.
velocity, and it
Right.
may constitute some changes. So I
Hmm.
think they'll get to the two. I think they'll get to the 250. I think 12 months is realistic to get to that run rate.
Hmm.
But let's see. It's really going to be dependent on what kind of issues they're dealing with. I think this 10 micron edict from Elon, if that really came out that late in September, I mean, you normally have those discussions before you've ever done the first industrial design of the product because you're trying to understand like what's your tolerance net. Like something companies engineering does will build up a tolerance analysis of the piece parts themselves and of the entire assembly to see if they can actually hold something like 10 microns. 10 microns, at a machining level of aluminum or stainless steel, that's fine. You can machine it, you can hold 10, that's fine. But if you're talking about the resultant gaps from assembly, that's really, I mean, that's really difficult to hold. But
Hmm.
we'll see. We'll see how that gets interpreted.
And what percentage, like when you talk about cost sharing amongst, or cost sharing, but also learnings across Model 3, Model Y, and bringing that to Cybertruck, uh, is there much there that Tesla can bring through? Of course, with supply lines, maybe, or methods, but in terms of parts, even, is there very much that is overlapping there that Tesla can piggyback off of?
Yeah, I'm sure that they're trying to reuse certain fastener types. I know that I don't know if they're reusing the exact motors from the Model S and X Plaid or not, or if they're tuned slightly differently, but they're trying to get reuse out of that. But
Hmm.
there's if you've listened to me in the last couple of months, I've said this is going to be a sticky ramp because there's just a lot of new stuff here with the castings. Again, Tesla's
Hmm.
done not all castings are created equal. It's based on the
Right.
size, it's based on the geometries. So the castings, the 48-volt architecture, is this thing waterproof? Because that's a whole
Hmm.
new level of testing and sealing
Right.
work you've got to do in the factory. That takes in the
Yeah.
mobile phone world, the mechanical sealing of the phone is one of the most tenuous issues to deal with, and it kind of is one of the last problems to be resolved mechanically before the device can be put into production. Because
Hmm.
think about it, you get all the way to the end of the line, you have a beautifully built product,
Yeah.
and all of a sudden you have an air leak failure, and you're like, oh my god, I have to tear this whole beautifully built product down because of this minor
Yeah.
air leak issue. So
Yeah.
there's a lot of new stuff in Cybertruck.
Hmm. And so I almost look at the Cybertruck date. I go, okay, well, we're about a month away now. We still haven't got pricing. We haven't really got specs. We don't know what trims they're going to come out with. We don't even know who they're delivering to per se. On a spectrum between Tesla Semi event, which of course was a success, but it's not like we got specs out of there. It's not like we knew how many they delivered. People were still trying to calculate what the range was, what the tow load. Like people were still trying to figure this out. Where I was just kind of dumbfounded. Like, why not just release this on the Tesla Semi date? Tesla, that is, to a full on like Model 3 launch or Model Y launch where we know everything. It's like, these are the specs, these are the pricing, get in line, here's how long the wait list is. Between that kind of range, where do you fall between for this event coming up? Is it going to be more of the discrete, we'll wait, we won't get very many details, in which case I don't really see this being a stock catalyst at all, and then the opposite side being total transparency?
I think you're going to get more than you got on the semi. I went to the semi event and I was surprised. And one of the reasons you didn't get a lot of detail is when you walked around, like
Hmm.
there's no factory, there's no line. And so
Right,
these
right,
things
right.
are essentially hand built. Where there is a Cybertruck line installed,
Hmm.
125,000 unit capacity, there's no, there's no line in the earnings report about semi
Hmm.
capacity, and so that line has to be built in Nevada. So I think that's one of the major reasons they're short on data on the semi. So I think it's going to be closer to the model, to the Model 3. But I think Tesla's also learned some lessons from doing those launches as well. Of like, okay, this is what we thought we were going to be able to do, and then we didn't end up shipping that lowest tier model version of Model 3
Hmm.
for some period of time, the entry version. So I think we're gonna get something in the middle. I think first off,
Okay.
I'm not surprised we don't have specs or pricing because I've never seen specs or pricing before the launch date. I think maybe except for Model Y. But I don't I'm not surprised we haven't seen it. They're gonna have a launch event. And by the way, they're gonna learn a, a ton about where they can price this thing just based on their build data they're going to get over the next month. So if I'm Elon and on that management
Hmm.
team, I want to take as much time as possible before I set
Huh.
that final pricing. I think when they show that pricing, they'll say
Yeah.
like, look, this caveat, just like we do with all of our products, we try to bring our costs down. And so, this is where we're at right now. And this is what we need to do you know, to quote unquote clear inventory, which, I'm sure they can sell Cybertrucks for a lot. Um,
Yeah.
and then that number will come down over time.
Hmm. So that almost implies then for the delivery event, it's not going to be the average person getting a delivery in the next couple months. It's going to be an insider slash employee slash influencer with some sort of marketing campaign, like in the same way that it was PepsiCo. It's going to be someone that knows what they're getting prior to and can take delivery as kind of just like a showcase of it.
Yeah, I don't know about influence. I don't think Tesla needs more orders. But I think they wanted, to do a good job displaying the product. But yeah, I think, they'll probably want to keep it's kind of a tight loop in the beginning and then open it up.
Mm.
But again, maybe they'll prove us wrong on this because they've been testing the product for a long time.
Mm.
And so yeah, I'm not surprised. I mean, everybody sees these Cybertrucks. They see them in the outlot in Austin. They're like, oh my god, they're in production. I'm like, well, no, they need to test a lot of vehicles. There's a lot of new stuff on this product. The software people in Palo Alto, they need it.
Yeah.
So many groups were probably starved of Cybertrucks all the way up until this point, and now they finally got something that they
Mm.
feel comfortable about putting in mass production. So now
Mm.
they got to complete all their test cases. That's what's happening right now.
And that's totally fair because the last thing you want if you're Tesla is to release a product and then it be subpar slash you overlooked something, and then that ruins the entire not only brand appeal but of course the product appeal for a lot of people because it'll be forever tainted as that product that failed at launch. So totally fair. I guess later is always better when it comes to that sort of stuff. But the
Yeah.
Cybertruck, I guess, really relays well into our next topic, which you've talked a little bit about on X. It's about advertising because when the Cybertruck's rolling around and it's not even in production yet, and employees are driving it and testing it around, the amount of videos, the amount of photos, the amount of exposure that this thing gets just by rolling around and being, like you said, that nud, brand new vehicle type, nothing like it before, it gets this level of exposure. And so when we talk about advertising, and we talk about the general pool of Tesla buyers out there, non-Tesla buyers out there, non-EV buyers, I should say, where you're head at with advertising, just at a general perspective, are you pro, against, and how do you see advertising playing a Tesla strategy for demand generation in the next 5 or 10 years?
Yeah, I'm pro getting a confined set of data to understand how to make decisions and how to proceed. I'm not a marketing expert, but I in everything that I've done in terms of like designing manufacturing solutions or running a supply chain, everything has to be kind of data driven. And I think there's data to go get, and I think Tesla's doing that.
Hmm.
Um, and you know, I can't tell them exactly how to design those data experiments and how to do it, but I think they should. My short answer is that they should be going and should be getting the data um, on advertising. And I had another point. I don't know if I just lost my train of thought, but just uh, I think I just lost my train of thought on it. I'll come back to it, I'm sure.
Sure, no worries. Yeah, so when you talk about, well, you talk about advertising and getting data. It's funny because as a media guy myself, person that buys media a lot, um, that is literally what you're doing. You are buying data. So it's sometimes, a client will come back, or you'll look at a campaign, you'll go, do we really just waste $10,000 on this campaign? And you go, no, you bought the data that you saw with the market. What's, even if it was a flop, that you saw that the market reacted in a negative way to this piece, to this type of persona. So even if you fail, like you said, you still get data behind it. Now, Tesla, I should preface, and as you guys know, Tesla is running Google search ads as it stands. Like text ads right now are running. So if you Google Tesla Inc. or Model 3, Tesla will show up at the top of the search. I think that's more of a defense mechanism because Tesla wants to make sure that their competitors aren't brand bidding for their keywords like they were in the past. If you'd Google Model 3, the Chevy Bolt would show up. So I think there's a degree of just making sure that Tesla's brand
That's
is,
interesting.
is yeah. So that happens a lot where brands will compete with other brands on their keywords. So I think brand bidding is probably what they're doing to a degree. But I would love to see Tesla start to test out a lot of their video campaigns that they have already, clips that they've already made on YouTube to cold audiences, to audiences that don't know about EVs, but but are in the market to buy cars. One of the audiences that you can actually select on Google, huge advertising network, you can scale massively on Google's platform, is a market called in-market car buyers. Google literally knows with their AI, their black box, who is in the market to buy a car right now. Often it'll know you're ready to buy a car before you even know you're ready to buy a car. That's how good their data is. And so when you look at targeting on YouTube, for example, YouTube is an education platform. We're here on YouTube, we're watching this video, we're ready to watch long form content. We're okay with spending 5 or 10 minutes researching stuff. So I think if Tesla can take a lot of their education campaigns around charging or long road trips or FUD or stuff that people have misconceived conceptions about when it comes to EVs and run them as video campaigns to educate the masses, I think that is not about the 6 to 12 months from now and the quarters ahead, but it's about increasing that larger pool of buyer and that total addressable market in the next 3 to 5 years. What are your
Hmm.
thoughts on that?
Yeah, I agree. I mean, if I just poll like in my family and friends, just to have any kind of conversation about EV, what comes up? I heard your battery's gonna die within 3 years, and they cost
Yeah.
$15,000.
Yeah.
I heard they're lighter and they're all made of plastic, and when you get in an accident, you basically in the battery, you're trapped and you have this plastic car and you just melt. I'm like, well, no, and it just one thing after another, and I've realized like, well, a lot of my family and friends they're getting media either in print
Mhm.
media or TV. They're just hearing these things that are probably sponsored by oil companies and other legacy auto companies, and it's changed how they think. So I think there's a disinformation
Mhm.
piece of advertising that needs to be dealt with.
Yeah.
And and I agree with you. I think there's an opportunity here, with in the right form, not necessarily on TV, like you said, in the right form to really reach people that don't have the exposure to EVs.
Mhm.
Again, everybody thinks kind of like East Coast, West Coast. There's this whole thing in the middle of the country where there's just not tremendous exposure to
Mhm.
EV. Now it's
Yeah.
changing,
Yeah.
but it's taken 10 years, and
Yeah.
it could be, maybe it could be accelerated with that. But again, I think this is the point I lost my train of thought of. I just wanted to come back to really quickly. Putting myself in Elon and the Tesla management team's shoes
Hmm.
in their first principle thinking, I think they're like, okay, I have this budget. I can design a new product. I can take my cogs down by buying experimental material, working with a new supplier to combine these two parts. And then I know, like, if this works with high probability, my cogs are going to go from here to here.
Hmm.
Or I can go spend $100 million or whatever amount on ads and not be clear of the ROI. So I think for a while they just completely cut that off and just like, look, I want to make new products, I want to invest in R&D, and I want to take my cost structure down because I know that's how I'm gonna that's how I'm gonna expand sustainable transportation. And I think they've recently come to the realization of like, well, probably have to do a little bit of this. So why not just go out there and get some data to understand it? So again, I'm in the camp of, I'm not just like go advertise it's going to solve all of Tesla's problems. More about I'm just curious, like what would the data tell us?
So, and the point you're making is shared by a lot of Tesla bulls, and I appreciate you bringing that up because I think that is the way that Elon's probably looked at this dilemma. But here's the thing with Tesla: that's a false dichotomy because Tesla has $26 billion in cash. They have a hundred
Yeah,
thousand plus employees. They can do both. They can do both. It's quite
yeah,
simple to me. Um, and I guess I totally understand. Probably, I'm not putting words into Elon's mouth, but I think he probably looks at this and goes, "Well, look, if the price goes down to an absurdly low level, people are going to talk about it. People are going to research it. They're going to figure it out themselves." But what I think you so eloquently highlighted there is that the misinformation that is out there, there's like that theory works in a perfect market environment where the information is perfect and readily available. It's transmutable. But the market that we live in today with EVs is not perfect. In fact, it's tainted, right, by a lot of legacy media. Talk about Toyota, for
right,
example. Toyota is, I loved my Toyota Corolla. I love the brand, but what they're doing now with their next stage of their innovation and trying to essentially greenwash this and say EVs are great, but also then they're just kind of bait and switching you into a hybrid. They're talking about EVs and they're kind of saying
right,
electrified vehicles, not even electric vehicles. It's so obvious where this is headed, where legacy media is trying to run the narrative. And what I see from that perspective is a huge danger in the next 5 years. If the mass market is only educated by legacy media with the advertising that they paint, and not by the advertising that Tesla and can really educate with, I think we're going to live in a world in 5 years where the majority of people have total misinformation with EVs, whereas today I think it's a small select group of people. So the last thing I want to see is legacy media have to educate people on electric vehicles.
right. I think that's a great point.
So, but like you said, engineering is the basis of it all, and if Tesla can make a superior product, I guess that talks for itself in the long haul, um, as well.
It does, but there's, I mean, EVs, internationally are very very small penetration.
Hmm.
There's entire countries that just don't have access to this. So, um, and you have to look at it. But I think the other thing that people fail to do is to kind of break down car sales by segment. Like there's this thinking of like, well, if a Tesla is the same price of a Rav4, why would anybody buy a Rav4? Well,
Hmm.
Tesla is the same price as a 3 series, a 5 series that gets transcended all these different price points, but people are still buying these other vehicles. Well, why is that the case?
Exactly.
And there's
Yeah.
there's definitely something there. So you have to look at it, I think, by segment. I think Tesla should purposefully design a car that can sit under $30,000 with the right unit economics,
Hmm.
um, or figure out how to get 3 and wide of 5 million unit scale per year. It's kind of one or the other. It's probably not going to be that. So you have
Hmm.
to get that purposely designed car with the right unit economics, with the right trade-offs made to sit
Hmm.
in that tier. Because quite frankly, I don't know why people would even compare a Model Y to a Corolla, or I mean just or Model 3 to a Corolla. They're not even close in terms of performance and capability. It's like a
Yeah.
to me it's a
Yeah.
diss to Tesla.
Yeah, yeah, and if you look at the average used car price even, right, in the States, I think it's like upper 20,000s, right?
Yeah,
And in some states, you can get a Model 3 with tax incentives for as much, if not lower. So you live in a world where these two things should
yeah,
not be true in the long haul. That an average used car is the same price as a new Model 3 in some states, and yet you're seeing people opt for the used car.
correct. It's a fantastic point, and that's the point where we're at. And I think there is a realization of that, and now it's like, okay, where do we go from here?
Yeah, I think Tesla definitely thought, okay, well, if we, by now, I think if you asked them a year and a half ago, okay, if they're at the prices they are today, they would have thought their order book is a lot stronger than what they potentially see it at today. And I think that's why they're a little bit more open to advertising. But it's funny because every other earnings call, Elon kind of goes back and forth a little bit on a shareholder meeting. We told me, Kevin, that,
Right.
sure, like, good ads are ads that people don't think are ads. And then we saw them try Google search and probably just brand bidding. And then now Elon is kind of like, listen, guys, like I don't care what you talk about advertising, interest rates just stop, just suck. So it's kind of this back and forthness that we have that's kind of creating this debate into the community. And again, people when they think ads, they think Super Bowl commercials, and that's really not what we're talking about at all here.
Right.
Uh,
Right.
Let's move on to I'd love to get your general macro perspective on Tesla as a company at the end of this decade. We talk about Cybertruck, we talk about compact, we talk about energy. There's so robotaxi. Where do you see Tesla at the end of the decade from an engineering perspective? Are they still innovating at that point? What are they innovating on? And you don't have to dive into all the details, but just generally speaking, on a macro level, how do you see Tesla continue that culture of innovation internally at the end of the decade when presumably all these products are ramped up? And then what is, other than let's say Tesla Bot and Robotaxi, what are really like the auto challenges that Tesla will be facing at the end of this decade that we're not talking about today?
Yeah, I kind of see it in like three major chunks. One is that they're trying to solve this sustainable transport for the planet,
Mhm.
and really that's Tesla and SpaceX, but they're trying to solve that and get that curve to a point where like this is where we're going by 2030. We should be well on our way, but there's still a long time to replace the fleet. And then you've got sustainable energy solutions as well. And so on the energy side, they want to solve for that as well. If you look at our current solutions today with coal fire plants and peaker plants and so forth. So I think there's just a tremendous amount of work that they want to do there. And then we're then you have the bot, and then you have AI, which is also obviously goes together with the bot on the and full self driving. So let's hit full self driving first because that's kind of like they've been working on this for a while. I believe they want to get this to the point where it turns into this amazing driver. Like it's the best, tool for you when you're in the driver's seat. You can just turn this thing on. You're getting from point A to point B. You never touch it. And then eventually they want to obviously turn it into a robotaxi. But I think along the way, FSD is going to print billions of dollars as being
Hmm.
like the best. There's nothing out there that's like it, that
Hmm.
you can buy as a consumer. You can have delivered to your home, and then you literally get in it and press a button, and this thing's going to take you from point A to point B. There's
Hmm.
nothing like that as a consumer. So I think they need to get that rock solid. And then
Hmm.
everything is going to have this AI, this Tesla AI overlay, probably utilizing his XAI company,
Hmm.
but everything, the communications within the car, we're not going to have these goofy, like the touchscreen performance, by the way, in a Tesla is just, it's not good in my opinion. Like
Hmm.
I'm always like ghosting. You shouldn't have to even touch the screen anymore. You should be able to just have conversation with the vehicle,
Yeah.
and there should be context, and just it knowing what you want. And it started right with the calendar appears when you get in, and now
Yeah.
it appears like the destination in the calendar. Now it's already set up in your car. So just see that evolving many different layers over the next couple of years. So everything that you buy from Tesla has this AI
Hmm.
assistant in it at kind of its core.
Hmm.
And Tesla will be known as an AI company. And on the bot side, this is a whole different. This, you have sustainable energy. You've got the bot thing is like, well, how do you have like unlimited GDP, and just like how do you solve for labor? Um, and people don't realize, like, one of the constraints to build, like to ramp up a facility in Nevada or Austin or whatever, is actually labor. I've
Hmm.
actually built a factory in in the Dallas area. And one of the biggest surprises we had, we needed a couple thousand people.
Uh,
Took us a long time to find people able to do that.
huh.
So in terms of 2030, I see Tesla as these multiple businesses with this AI overlay. I think it's going to be incredibly successful. But there's going to be risks along the way. And are they going to be first mover, or are they going to be dominant in what and how they approach it?
Hmm.
There's definite risks along the way, but
Hmm.
I think they're set up pretty well.
Really, it's almost like it's almost like you can read my screen. Had this teed up for next. Tesla supply risk. We talk about risks. I'd love to hear from a general perspective. It can be pointed risks or just general market risks. There was that news out that China is tightening graphite supply
Yeah.
and exports, and we talk about partnerships that they may have, and how do you see risks when it comes to Tesla on the supply side, or just even on more of a product side?
Yeah, I mean, the risks right now are around execution. I have been a little bit concerned. Um, you know, in it, and these are difficult things, right? So, like with Cybertruck this summer, the call was, "Hey, we're having an event in Q3. We're shipping this thing this year." They didn't, get into a lot of detail. I think they've been appropriate on that. But then for that to continue to slide out, and then now we don't know, it's kind of indeterminate. I mean, I'm starting to get a little bit concerned about execution,
Hmm.
but the thing that really kind of tipped it off for me was the Model 3 Plus launch.
Hmm.
Because once you have a global product, one of the things you never really want to do is to regionally launch your next version of that global product. You
Hmm.
want to if you want to relaunch a brand new version of that product, you want it everywhere. You don't want to get Osborne in one region versus another. And so I was really surprised
Hmm.
um, to see Model 3 Plus. It's going to be in volume now this month in October in Europe and Asia. And, um, we have an indeterminate date in North America, maybe some point in the first half in North America. And that just to me, they didn't draw that up that way. When
Hmm.
they started planning the Model 3 refresh probably 12 to 18 months ago, there's no way that they said we're going to ship here first and then here 6 to 8 months. There's no way that it was drawn up that way. So to me, like, something happened from an execution perspective. Now we can
Hmm.
speculate. I'm assuming new battery pack maybe not be available in North America yet. Maybe they have to do some more structural castings in North America to hit the cost structure. But to me, it comes down to, when you have a global product, you should relaunch it as a global product,
Huh.
at scale. And so I'm getting a little, it's like, whatever the risk, I'm a little bit concerned about execution.
Huh. Yeah.
And in terms of supply, Tesla, this is the unwritten thing about Tesla. It doesn't get a lot of visibility. Tesla has a very talented supply chain team, and
Hmm.
it's to me, the foundation of it is the culture that comes from the CEO all the way to his direct staff, all the way down to every employee in the company. The culture of cost and the culture of of this sustainable transport mission where everything's about scale. So when you have I've worked in companies like where the CEO's like, all right, you're the supply chain guy, or girl, you figure it out. Like, we've designed the greatest product ever. Like, why can't you build it?
Right.
He's completely different. He's thinking about cost before the product is designed. He's thinking about station velocity. There's in the book they were talking about him working through the different station velocities for um the Model 2 or the next, the compact car coming up. He's cost first. He thinks like a supply chain person. He spent that time in the factory
Hmm.
designed for manufacturability. You can see that that was not the case in Model S and probably Model 3 definitely.
Hmm.
But I think that's the unwritten thing about Tesla. So are there supply risks? Yes. They do have a very good team, and they have a CEO that's kind of
Hmm.
that's looking out. By the way, do you want to be the company that disappoints, the supplier that disappoints Elon Musk?
Right. Yeah.
Probably not.
Yeah.
Or even the head of state. You want to be the head of state. I mean, they're all pulling him in,
Yeah.
right? They make no mistake. China, the deal that Tesla got in China is because they wanted access to him and his team
Hmm.
so that they can grow that EV capability out in China. Not saying that
Hmm.
that was this master plan from Tesla to train China up on EV, but they
Yeah.
want access to the best.
Yes.
So, from a supply risk perspective, I think they're looking out ahead. I think they have a CEO that's focused. They have a great team, and I would be surprised if something can come up for sure. But I think that's why you're seeing the lithium refinery. That's why
Yeah.
you're seeing them make these moves many years out.
Yeah, Corpus Christi is an underrated and not talked enough part of Tesla's plan in Giga Texas. And then to end off on some good news, we got that news out of BP today. The oil giant is going to, I think, buy $100 million worth of superchargers from Tesla. Um, it's just a trickling of Tesla's monetary. Tesla can monetize in so many different ways that people forget. FSD licensing being one of them, supercharging being another one. In this case, that they're going to be selling these chargers to BP. How did you take that news? Just, I guess, if you hadn't seen it, but what are your first reactions if you haven't?
Yeah, oil companies are now customers of Tesla, and I know people just think about that. And this is not just an oil; it's like BP. Like this is a gigantic company, and you have to think like they're thinking about the future too. And okay, you have gasoline, diesel at these stations, and this is what they sell. But they're a distributor of that, and why not be a distributor of charging solutions? Why not work with the
Hmm.
company that's got the best unit economics on the physical hardware, that has probably the best software and it has the best uptime? So all these things are considered. So I think it's the first of many.
Yeah, awesome. Jeff, I appreciate your time as always, and it's lovely hearing your analysis. It's great to talk to you on the channel. Where can people find more from you on X or YouTube or wherever else?
Yeah, I mean, mostly I'm on X, and that's at the Jeff Lutz, and I'm on Herbert's channel, Brighter with Herbert. Every week we kind of do a one-on-one on different topics, and on Cyber Bowl, so a number of
Yes.
different areas. Yeah, just ping me on Twitter, or sorry, on X, and love the chat.
Yeah, and I'll put all the links in the description. Jeff, you got to start your own YouTube channel, man. You heard it here first. I think you should do it, or some sort of a ongoing thing where people can just hear thoughts from you directly and quick little tidbits or something.
Yeah,
Because yeah,
there's a lot
like I
of
told you
things
in the
out
beginning,
there.
there's a lot of things out there, and your expertise is quite valuable. And a lot of people in our private Juju community have requested you in the last couple of months. So, pleasure to have you on. Thanks so much for spending some time with us.
Thank you, Josh. It's great. You do a great job with your channel too, so appreciate it.
Cheers. Thanks. Thanks, everyone. Take care. Hit subscribe on your way out and go check out Jeff on X. Links in the description. Awesome. Thanks, man.